If you're interested in data around Ethereum, this is your video. There's a lot of very interesting on-chain data. So we are looking here under the hood of Ethereum. We are looking at gas fees, at activity, at number of active wallets, at miner revenue. We're also looking at the exact contracts that are actually consuming all this gas, that are driving adoption for Ethereum. And we are going to put all of these charts into context with the price chart. So is there any kind of correlation here? Can we maybe time the tops and the bottoms by not just drawing those lines here, but by actually looking under the hood, by looking at more refined, more detailed data, seeing what happens with those different transactions. Now let's start off this video with the very first chart, the number of transactions on the Ethereum network. This is a 7-day moving average. And it starts in 2017, goes all the way to today. And look at how the adoption in 2017 really rose and then saw a peak in January 2018. Now, January 2018 was also a peak for Ethereum, right? After that, the Ethereum price went down during the crypto winter by 94%. So timing this really matters. Now we then see a second peak. This was in roughly April or May of 2021. What happened to the price? In April or May of 2021, again, a price peak. So there is some kind of a connection, right, between how many transactions are being performed and how high is the Ethereum price. Now we can plot this slightly differently. This is a 7-day moving average. We can also look at this in terms of monthly bars. So this is the same data, just drawn slightly differently. The last data point over here with a star is not complete, right? The July hasn't yet ended. So for the very last end here, it's probably better to look at the moving average instead. Now, instead of looking at the transactions, let's actually look at the market participants. How many active wallet addresses do we currently have on Ethereum? Again, our peak in 2018 and then our peak in April or May of 2021. What I find interesting here is that over those years, the number of active addresses hasn't actually grown that much. If we look at this from peak to peak, right? We maybe see 700K to 755K or so. So maybe a 10% increase from one peak to the next. When we compare the price peaks, that's a difference of 190%. So it looks like Ethereum tends to trend up, even though the number of active addresses might not be growing that much. So the people that get involved in the ecosystem, they tend to keep their money locked up. They might not be that active on Ethereum anymore, but they might keep holding the ETH. And that's then what leads to the long-term increase of the price, while the activity itself actually doesn't grow that much. Now again, we've got the same thing in monthly bar charts. Not really much of a difference here. But let's now look at the new people coming in. So what we looked at before was the active addresses, right? How many players are in the game? Let's look at how many players are coming into the game. And this is interesting. This shows us that the growth in terms of wallets actually was lower in 2021 than it was in 2018. So we did have 300,000 new wallets created in January of 2018. We didn't even touch 250,000 in 2021. This kind of makes sense, right? When we just look at the slope of the growth here, this growth happened way quicker than it happened with the recent bull run. So it was less people entering, but probably with more money or probably just at a slightly slower pace. Again, the bar chart. Next, let's go to the on-chain volume. Now, this is interesting because this shows a chart denominated in US dollars, not in Ethereum. And this is growing way quicker than the number of transactions or the number of addresses, right? So the number of players is pretty much constant. The number of new people entering is pretty much constant, but the capital that's being moved is growing relatively quickly. The peak in 2018 is almost barely visible on this chart, right? The new peak was way higher. So this indicates that the people that are joining the party nowadays, they simply have more money to play with. Now, why is that? Is this simply because it's institutional adoption? Not necessarily, right? As we have said before, the growth from peak to peak was roughly a 3x. If we look here at the on-chain volume from maybe 7 billion or so, this went to 35 billion. So this is more than a 3x. But still, a lot of that growth is simply just the appreciation of the Ethereum token. Or in other words, the long-term holders that didn't sell their ETH, that pushed up the price. They were responsible for the people that actually did use Ethereum, that they moved more value. That's the main driver here. Let's continue with the Ethereum miner revenue. And this, I think, is a very fascinating chart. Subsidy simply refers to the regular inflation of Ethereum, right? What is transaction fee and uncle reward over here? This is the additional money people are willing to spend in order to get their transaction through. So when a lot of transactions are competing to get processed within a block, then the additional tip that people have to give, or the additional gas fee, the additional gwei that people have to spend, it goes up. And that's revenue independent of the inflation of Ethereum. So that additional revenue simply goes up when Ethereum is bottlenecking, when the demand is higher than the supply, when the demand for processing a transaction is higher than the fixed block size of Ethereum. And so we can put this in percentage terms, right? We peaked here in almost 50% of all of Ethereum's miner revenue being that transaction fee. So all of this pink line over here, this was simply just Ethereum being used too much. And we can see that this was way more important, way more significant in 2021 than it was in 2018. We already saw something like this happening in 2018, but in 2021, Ethereum was way more busy. Now, why is that? Why is Ethereum suddenly being used so much when the number of transactions themselves didn't really grow that much? I think this has something to do with the complexity of those transactions. You'll see this at the end of all of those charts. In the early days, it was mainly just sending Ethereum around or maybe swapping one token to another. Nowadays, we've got more complex DeFi applications and of course NFTs. We've got a few more charts. If you so far enjoyed this video, please give this a like. And of course, don't forget to subscribe. This is the next interesting chart. This is Ethereum's hash rate, or how much computing power goes into securing Ethereum's network. And this is growing pretty much constantly. We do see our dips. Those dips, they coincide with price dips. Strong reduction here might also be related to the Chinese ban. We also see not much growth of this hash rate during the crypto winter. All of this makes sense. But over the long term, this is growing, and this is simply just miners becoming more efficient due to better improved chips and also cheaper electricity. So if your operations become more efficient, you can afford to spend more on Ethereum mining. So the competition for miners goes up. So the hash rate of ETH goes up. What's also interesting is how diverse that hashing is split up. So this is different to Bitcoin. Ethereum in that regard is a bit more decentralized. We have quite a bit of others in terms of hash rate. So a lot of private people just hashing Ethereum. Then we've got also a relatively nice split between different companies. So we don't really see a single company taking over all of the hash rate. That would be a bad thing. Now, this is of course decreasing the miner revenue per terahash. And that's simply because the competition, as stated before, is going up. At the same time though, Ethereum's price is also going up. But still, as a miner, you have to invest more. You have to become more efficient over time. Your cost per terahash has to go down, otherwise you will be pushed out of the market. And so we have seen that the Ethereum network got really busy, right? The transaction fee percent of total miner revenue went really up right to 50%. And we can see now that the average transaction fee went up even more. Here, look at this. The fees per transaction, it was at around maybe $3 or $4. Then it went up all the way to $50. And that's not because the number of transactions went up that much, right? It's because of the complexity. Each transaction now performs way more than it did way back in the days. The applications built on ETH's blockchain need to perform more things. Now, how profitable is it to hold Ethereum? What percentage of Ethereum's supply is in profit? This is obviously quite volatile, right? When there's an all-time high, all of Ethereum supply is in profits. Then when there's a winter, this goes down. Look at the low here is at 25%. So even though Ethereum went down by 94% or so, still a quarter of all of Ethereum's supply was still in profit. So a quarter of the people actually bought before April of 2017, and they still held on to their ETH. So what does this tell us? It tells us to simply have a long time horizon. If you want to be in those 25%, you simply have to buy and hold and forget. Only then can you endure volatility and downturns that are that brutal. All the people with shorter of a time horizon, they had been in losses. And currently there seems to be a learning here, right? Because still 75% of all of ETH supply is in profit. So there's a good chance that you're actually still in profit with your Ethereum, even though we went down by 70% or so from the all-time high. If you're not, then you're probably simply just too early. You simply just have to wait for longer. It's interesting also how the bottom over here, the Corona crash, pretty much matches with the bottom after the crypto winter, which could imply that maybe we are not yet at maximum pain. But there's many ways to try to time the bottom. This is probably not the very best approach. But still, it's interesting how the same kind of fraction of people were in profits and in losses, even though the bottom in 2018 versus the bottom in the Corona crash still had a 34% price rise in between. So if this chart ever goes to 25%, it's unlikely that the price chart will also be back to, say, $110, which would obviously be a huge crash. I don't expect that ever to happen, but we would see that kind of a level here, maybe when we hit already $400 or $600 or whatever it is. So this bottom here tends to rise with time, the moment of complete capitulation. Another on-chain chart showing the Ethereum addresses with a balance over a certain US dollar amount. There are better representations of this data, but what we can see here, for example, is that the wallets that are 10x larger, so the 10K wallets versus the 1K wallets, they are probably larger in numbers than this relationship here would imply. So in other words, there's probably more value locked up in the 10K wallets than in the 1K wallets. Even though there are more 1K wallets, it's probably not 10 times as many. And it's likely going to be the same for the 100K to 10K and for the 1 million to 100K. So still, Ethereum is relatively top heavy and is owned by a few rich people. This is a chart relating to the percentage of Ethereum where the supply is active. So how much active speculation is there? How much swing trading can we see? So in the last 90 days, how was the activity? And then we've got 1 year, 3 years, and 5 years. There aren't too many visible patterns here, so I'm not sure if you can really use this properly for market timing, but it's good to have this chart just for completeness sake. Now, this here, I think, is very interesting, and it tells us a story of what Ethereum is mainly used for. What are the top 20 gas-consuming smart contracts? And at number 1, we've got OpenSea over here, so NFTs. Then we've got simple transfers. Then we've got swapping on a decentralized exchange. What is this swapped against? Very often a stablecoin, Tether, then another DEX, and then we've got a registrar controller, also NFT related. Another stablecoin, another decentralized exchange, new contract deployment, and then a DEX aggregator. So basically a contract that tries to find the best price across different decentralized exchanges. So we can see still Ethereum is mainly used for speculation, either for NFT speculation or for altcoin speculation. It's being used to swap back and forth between stablecoins and altcoins. It's being used to flip NFTs. That's at least in terms of gas fees, what's currently driving most of the miner revenue. So when there's less action around Ethereum, or rather around NFTs, then we will also see transaction prices going down. And that's what's currently the case, right? NFTs aren't being that hyped anymore. So performing your transaction on the blockchain isn't that expensive anymore, relatively speaking to the hype times at least. Still much higher than what we have seen during the crypto winter, but that can also be arbitrage bots, that can be borrowing and lending platforms, simply just a further development of the ecosystem. the fact that NFTs aren't traded that actively anymore helps with freeing up space and reducing fees for everyone. If you've got Telegram, consider joining the Bitcoin Strategy channel. Simply search for this term within the Telegram app. You might also consider the premium membership. Link is in the video description. It's thebitcoinstrategy.com. There's a similar video discussing Bitcoin. Feel free to check out that video. It's over here. And thanks for watching this one. Bye-bye.